Welcome to TalkTickers, your source for deep dives into earnings calls. Today, we're looking at a major enterprise software player.
That's right. We've got their latest quarterly results, Q1 Fiscal 26, and some pretty big acquisition news to unpack.
Exactly. Our mission, as always, is to dig into the numbers, the strategy, what management said, and basically give you the key insights fast.
We've gone through the earnings call materials, so let's jump right in.
Okay, let's start with the top-level results for Q1. Just give us the snapshot.
Right. So revenue came in at $9.83 billion.
Okay.
And that's up 8% year over year. Importantly, that's 8% nominal and also 8% in constant currency. So solid growth there.
And the core business subscription and support, how did that do?
A little stronger, actually. Up 9% year over year in constant currency. So that underlying engine is performing well.
Good sign. What about profitability? Margins?
Yeah, they highlighted the non-GAAP operating margin came in at 32.3%.
Okay, non-GAAP. So adjusting for certain items.
Exactly. Things like stock comp, acquisition amortization, gives you a sense of the core operational efficiency. And they generated a lot of cash.
Mm-hmm.
Operating cash flow was strong at $6.5 billion for the quarter.
Wow. Okay. And looking forward, the visibility metrics, RPO.
Right, remaining performance obligations, so all contracted future revenue. Yeah. That hit $60.9 billion.
And the growth there?
Up 13% year over year. Pretty healthy.
And the near-term piece of that, cRPO, current RP.
Yeah, that's the stuff they expect to recognize in the next 12 months. $29.6 billion.
Okay.
That was up 11% year over year in constant currency. And, you know, management actually called this out as being better than they expected.
Oh, interesting. Why was that?
Mostly driven by really strong renewal performance. Customers sticking around, maybe renewing early or bigger.
Got it. So that strength, plus maybe some other factors, led to a guidance change for the full year.
It did. They raised the full fiscal year 2026 revenue guidance, lifted the high end by $400 million.
So the new range is?
It's up to $41.3 billion now, which implies 8% to 9% nominal growth for the year.
Okay.
Still expecting 8% constant currency growth, though.
So part of that raise is currency helping out.
A good chunk, yeah. They mentioned an increased FX tailwind expectation. Used to be sort of flat. Now they expect a $250 million tailwind for the year. So that's a $400 million swing, essentially explaining the high-end race.
Right. And full year margins and cash flow guidance. Did that change?
No, they reiterated those. Still targeting 34% non-GAAP operating margin.
Okay.
21.6% on a GAAP basis.
Yeah.
And strong cash flow growth, 10-11% operating cash flow growth, 9-10% free cash flow growth.
What about the immediate next quarter, Q2? What's the guide there?
Revenue expected between $10.1 and $10.2 billion. That's 8-9% nominal growth or 7-8% constant currency. So slight decel there maybe.
And cRPO growth for Q2?
Expected at 10% nominal, 9% constant currency. They did kind of flag that Q2 cRPO might feel some lingering effects from maybe slower sales cycles in the past and also just fewer big contracts coming up for renewal in that specific quarter.
Okay, so summing up the financials. Sounds like a solid quarter, beat maybe on cRPO thanks to renewals, guidance up mainly on FX, but holding the line on profit and cash.
Yeah, that's a fair summary. Shows good operational control, I think.
All right. Now let's get to the really big news, the acquisition.
Yeah, the Informatica deal. Definitive agreement to acquire them for $8 billion.
Wow, that's significant. What's the strategic thinking here?
Management called it transformational. The idea is basically bolting Informatica's strengths, AI-powered master data management, or MDM, and ETL capabilities onto their own AI CRM platform.
MDM and ETL. So all about managing and moving data.
Exactly. MDM helps create that single source of truth for key data, like customer data. ETL is the plumbing extract, transform, load, getting data ready from all sorts of different places.
And why now? Why is this so important for them at this moment?
It ties directly into their big push around, well, enterprise AI.
Right.
Management was really clear on this point. They said, look, every AI transformation in the enterprise is, at its core, a data transformation.
Okay, unpack that. How's enterprise AI different from, say, ChatGPT?
Well, think about consumer AI like ChatGPT. It's trained on, like, the whole internet, right? Massive amounts of public, often unstructured data. It's amazing at pattern matching, generating text, but it doesn't necessarily operate with governed, sensitive data. Accuracy isn't always 100%.
Well, yeah, it can hallucinate.
Exactly. But enterprises run on trusted data, customer records, financial data, HR info. It's highly sensitive, needs to be secure, governed, accurate. You can't just point a consumer-style AI at all that internal stuff.
So getting the data ready is the bottleneck for businesses wanting to use AI.
That's the argument. Management believes the big constraint isn't the AI models themselves. It's getting the company's own methy, siloed data unified, cleaned, harmonized, and governed so the AI can actually use it safely and effectively.
And Informatica helps solve that specific problem.
Precisely. They specialize in that complex data integration, MDM, data quality piece.
Yeah.
So the acquisition is basically buying the missing foundational layer they think customers need to really unlock AI across their enterprise.
Makes sense. What about the deal financials? Did they say if it was a good price?
They seemed happy, called it a great price, mentioned great multiples. They expect it to be accretive, meaning adding to profit and cash flow.
When?
Accretive on non-GAAP operating margin, non-GAAP EPS, and free cash flow by year 2 after the deal closes. Though they want to integrate fast, maybe pull that forward.
And how are they paying the $8 billion? Is it diluting shareholders?
No dilution expected.
Yeah.
They said it'll be a mix of cash on hand and new debt.
Okay.
And they also made a point to say it shouldn't mess with their current capital return plans, the share buybacks and dividends.
Right. They mentioned using some kind of M&A framework, customer success, strategic fit.
Yeah, trying to show a disciplined approach, focusing on how it accelerates their strategy and delivers value.
Yeah.
Expected close is early fiscal 27, which they clarified means around February 2026.
So buying the key to unlock enterprise AI, essentially.
That's the pitch. Let's see how the integration goes.
Okay, let's shift focus to the growth drivers they talked about beyond the acquisition. AI, obviously, but also Agentforce and Data Cloud.
Yeah, they frame this whole thing as a massive, multi-trillion-dollar opportunity across AI, enterprise software, and this concept of digital labor.
Digital labor. So AI doing tasks.
Kind of. Their strategy revolves around what they call the ATOM framework: apps, data, agents, and the metadata platform.
Atom. Okay.
The argument is you need all 4 pieces tightly integrated on one platform to really deliver on, quote, the real promise of agentic AI and actually deploy this digital labor effectively in a business context.
And Agentforce, that's their specific AI agent product. It sounds like it's taking off fast.
Incredibly fast. Launched just, 2 quarters ago, end of last year?
Yeah.
Already over 8,000 total deals signed, with over 4,000 of those being paid customers.
Wow. That's serious traction.
Management said it hit over $100 million in ARR annual recurring revenue faster than any product they've ever launched.
Oh, why?
They're pushing hard on usability too, releasing hundreds of pre-built assemblers to make it easier to get started. And they're adapting based on feedback.
Like the pricing change.
Yeah, they introduced a new consumption model,
Yeah.
flex credits, because customers asked for it. Makes sense for agents where usage can vary.
Any hurdles? What about government clients?
They mentioned upcoming FedRAMP high authorization, which is key for the U.S. public sector.
Yeah.
They seem pretty confident, even calling it the #1 agent platform already.
Mm-hmm.
And seeing international demand too, highlighted Japan specifically.
And this Agentforce growth, it's linked to their Data Cloud product, right?
Absolutely. Data Cloud is the foundation. You need the data organized for the agents to work well. And Data Cloud itself is scaling like crazy.
Numbers.
Surpassed 22 trillion records ingested. That's up 175% year over year. Just massive data volume.
And are customers buying both together?
Yes, that's a key indicator they watch. Nearly 60% of their top 100 deals in Q1 included both Data Cloud and AI investments.
That's a strong link.
And it shows adoption within the base too. Half of the Q1 new bookings for Data Cloud came from existing customers expanding their use. Same story for Agentforce. 30% of Q1 bookings were expansions.
So it's like a flywheel effect they're talking about. AI needs data, data makes AI better, which drives app usage.
Exactly. AI plus agent plus Data Cloud plus apps. They said Data Cloud and AI ARR combined grew over 120% year over year. It's now $1 billion plus combined business for them.
They gave some customer examples, right, to make it tangible.
Yeah, quite a few. Thin Air, the airline using Agentforce for customer service, aiming to automate 80% of queries.
Mm-hmm.
Falabella, the big Latin American retailer, started with a small pilot for order status checks on WhatsApp. Quickly scaled to $1 million plus deal across the region.
Wow.
Open Table deploying it for restaurants, employees, consumers. PepsiCo using Data Cloud across 11 cloud apps, plus the agent layer for a unified view of their beverage and snacks businesses.
Grupo Global in Brazil saw a 22% retention boost quickly.
Yeah, in less than 3 months. Drove upgrades, cross-selling. NG, the energy company, getting assistance for over 80% of users. Even examples like 1,800 accountant embedding agents right into their app.
And the core clouds are still selling well alongside this.
Oh yeah. Sales, service, platform clouds were in 9 of the top 10 deals. Over half the top deals had 6 or more clouds. Customers are clearly consolidating.
Partners involved too.
Big time in 7 of the top 10 deals. And they mentioned being the fastest growing ISV on AWS Marketplace, driving big deals there.
Industry cloud's still important.
Definitely. In nearly half the top 100 deals. Life Sciences Cloud had a great quarter. Mentioned Pfizer and Takeda using it with Agentforce and Data Cloud. Launched a new mobile app for reps too.
Okay, so the growth story is really about this integrated platform effect fueled by data and AI adoption.
That's the narrative.
One thing that caught my eye was how much they talked about using their own products internally. Salesforce on Salesforce.
Yeah, that's always a powerful message. It's basically, we eat our own dog food, and it works. It serves as a proof point for customers and drives real internal savings.
Like the sales agent example.
Right, their own sales team, using an agent in Slack, logged over 21,000 interactions, saving an estimated 44,000 hours a year.
That's huge. And the lead routing.
Using Data Cloud internally cut lead routing time from 20 minutes down to just 19 seconds in Slack.
Wow.
And in their own customer support, Agentforce handled 750,000 cases, on track for over 1 million this quarter.
And that actually reduced overall case volume.
By 7% year over year, which allowed them to redeploy 500 support staff into higher value data and AI roles, saving around $50 million annually.
So using their own tech makes them more efficient and gives customers a blueprint.
Exactly. Helps customers visualize what's possible.
Okay, so there's clearly momentum with AI and Data Cloud, but investors naturally asked about the overall company growth. When does this AI stuff really accelerate the total revenue growth back towards, maybe higher rates, pushing towards those $50-60 billion revenue levels eventually?
Yeah, that's the key question. Management acknowledged they're committed to growth, but they also stressed discipline on margins and cash flow. They're not chasing growth at all costs.
Okay.
They see this as growth transformation period, really leaning into this agentic AI moment. And a huge part of their plan to accelerate growth is investing in sales.
Distribution, hiring more people.
A lot more. Plan is to hire between 1,000 and 2,000 additional salespeople.
Where are they focusing those hires?
Specific areas showing strength. Small and medium business, mid-market, both saw double-digit bookings growth in Q1.
Makes sense.
Also certain geographies, UK, France, Canada, South Asia, PAC were called out as on fire. Latin America, Japan, US tech sector too. And of course, focusing reps on selling Data Cloud and AI specifically.
Do they have a target for how much sales capacity they want to add?
Yeah, aiming for about 22% overall distribution capacity growth by the end of fiscal 26. With more focus on the SMB and mid-market segments, they noted capacity had been kind of flat recently, so this is a real step up in investment.
And they feel good about the pipeline to support that larger sales force.
Seems so. Mentioned strong open pipeline, double-digit growth in pipe generation. They have their run rate business, almost 60% of the total, growing steadily, especially SMB. And they said the big deal momentum is strengthening.
Anything else helping drive growth? Pricing?
Mentioned pricing and packaging changes, making it easier to adopt the whole platform, potentially boosting average selling price per seat, and shift towards consumption.
Right, the new game of consumption.
Yeah, tracking things like the 22 trillion records ingested, how much is zero copied, the 30% Agentforce expansion bookings it shows, usage is becoming a bigger driver.
And it sounds like product development is really tightly linked to customer feedback now.
Very much so. Talked about forward deployed engineers working directly with customers, creating this rapid feedback loop. They're releasing features daily based on what customers need for things like pricing models, observability, testing, latency, data residency, audit trails.
All the practical stuff you need for enterprise AI.
Exactly. And working closely with partners like Accenture and Deloitte in that process too.
So the path to faster growth is more salespeople focused on the right areas, a good pipeline, better pricing, driving usage, and super fast customer-driven product iteration.
That seems to be the plan they laid out.
Let's circle back briefly to that difference between enterprise AI and consumer AI. You touched on it with the data aspect, but why isn't adoption just exploding like ChatGPT did, given all the hype?
It really comes down to that trust and governance factor with the data. Consumer models, like you said, use public data. It's like superpowered search and summarization. Accuracy is good, but not always the absolute priority.
Enterprises can't afford hallucinations with customer or financial data.
Precisely. Enterprise data is governed, secured, access controlled. You need trusted AI. And that requires getting your own house in order. First, unifying, cleaning, securing that internal data. That's the hard part. It takes time and effort.
Which is why the Informatica acquisition makes so much strategic sense for them.
Exactly. They see it as the key enabler. Solving that data harmonization and MDM challenge is, in their view, the prerequisite for broad, safe, effective enterprise AI deployment. Their own internal use proves it can be done, but scaling it is tough.
It also puts some of the more extreme predictions about AI taking everyone's jobs into perspective, doesn't it?
Yeah, management kind of pushed back on that narrative too. They called current AI word models, acknowledged they can hallucinate, and said while they're great for augmentation, helping with drafts, summarizing they aren't yet reliable enough for tasks needing 100% accuracy in many critical enterprise roles.
So more evolution than revolution, at least in the near term, because of the data foundation needed.
Right. The transformation takes time because building that trusted data layer takes time. Whoever solves that data piece effectively has a huge advantage.
Okay, let's try to bring this all together. What are the key takeaways from this earnings call and acquisition news?
Well, first, solid Q1 results. Operationally strong, especially on renewals. Guidance raised, though FX was a big factor there. Second, the massive Informatica acquisition, a huge bet that solving the enterprise data problem is the key to unlocking the AI opportunity. Third, incredible early traction for Agentforce and continued strong growth in Data Cloud, showing real customer demand for their integrated AI offerings. Fourth, they're proving the value proposition internally, driving significant efficiency gains by using their own tech.
And finally,
A clear strategy shift towards investing heavily in sales capacity, hiring thousands to capture the growth opportunity they see, particularly in the mid-market and specific geographies.
so understanding these dynamics, the results, the big strategic bet on data with Informatica, the AI product momentum, the internal use case, the sales investment, it's pretty crucial for anyone tracking this company or just the broader enterprise tech landscape, right?
Absolutely. It shows how a major player is navigating the hype versus the reality of enterprise AI implementation.
Okay, time for our This Is Not Financial Advice segment. Remember, everyone, purely illustrative fun, like a quick hedge fund pitch. Disclaimer, not investment advice. For entertainment only. Do your own research.
Got it. The usual caveats apply.
All right, committee, listen up. The narrative is clear. Enterprise AI hinges on trusted data. This company just made an $8 billion bet on Informatica to own that data layer. Simultaneously, they're flooring the accelerator on sales hiring, aiming for 22% capacity growth, focused on mid-market, where Informatica's capabilities could unlock massive AI adoption.
Okay, so what's the trade?
Paired trade. Go along the acquiring company of the bet is they integrate Informatica faster and more effectively than the market expects, pushing that crucial data plus AI story through their newly beefed up Salesforce, leading to upside surprises in AI-related revenue sooner than modeled.
And the short side.
Short, a basket of smaller, perhaps niche enterprise AI application vendors, the ones that don't have a robust integrated data management story. The thesis. As enterprises realize the data problem is the real barrier, these point solutions that rely on customers having perfectly clean data first will struggle. The acquirer, having solved the data piece, sucks the oxygen out of the room for those less integrated players.
So betting on the integrated data plus AI platform winner, shorting the point solutions exposed by the data bottleneck.
Exactly. High conviction depends heavily on smooth integration and effective sales execution of the combined value prop. High risk, potentially high reward if the data-centric view plays out. Again, not financial advice, just the thought experiment.
Interesting angle. It definitely highlights the strategic importance of that Informatica deal beyond just the price tag.
Definitely. So quick recap again, solid Q1 big data acquisition, fast AI product growth, internal proof points, and major sales investment.
It really paints a picture of a company positioning itself for the next phase, focusing hard on that foundational data layer needed for true enterprise AI.
And maybe a final thought for you, our listener, to chew on. How will this fundamental difference, consumer AI on public data versus enterprise AI needing trusted, governed internal data, continue to shape the tech landscape? Who really wins the race to enable digital labor? Maybe it really does come down to who controls that trusted data foundation.
Something to think about.
That's our deep dive for today on TalkTickers. Thanks for tuning in. We hope this helped you get informed fast.